Council tax is the system of local taxation used in England, Scotland and Wales to part-fund the services provided by local government in each country. It was introduced in 1993 by the Local Government Finance Act 1992, as a successor to the unpopular community charge, which briefly replaced the older system of domestic rates. These changes were never applied to Northern Ireland, which continues to use a system of domestic rates. The basis for the tax is residential property, with discounts for single occupants. As of 2011, the average annual levy on a property in England was £1,196. Organisation: council tax is collected by the local authority. However, it may consist of components levied and redistributed to other agencies or authorities. Collecting authorities: the collecting authorities are the councils of the districts of England, principal areas of Wales and council areas of Scotland, that is the lowest tier of local government aside from parishes and communities. Precepting authorities: the precepting authorities are councils from other levels of local government such as a county or parish councils and other agencies. In metropolitan counties where there is no county council, the joint boards are precepting authorities. There may be precepting authorities for special purposes which cover an area as small as a few streets or as large as an entire county. These all set their precepts independently. Each of the levying authorities sets a precept to be collected for households in their area. This is then divided by the number of nominal Band D properties in the authority's area to reach the Band D amount. How council tax is spent. Although it is the only tax which is set by local government in Great Britain, the council tax ostensibly contributes only a small proportion of local government revenue. The majority ostensibly comes from central government funding either as grants, or in the form of business rates which are collected centrally and redistributed to local authorities. Councils often plead that they have to raise council tax by huge amounts because its cuts to central government funding have left them with shortfalls, and they argue that council tax must be raised disproportionately, to compensate for this, because it makes up such a small portion of their income in the first place. This is, however, something of an illusion. A very large portion of central government grants to local authorities is used for funding schools. This dedicated schools grant essentially just passes straight through local authority accounts. In some cases this can even be nearly half the entire income of the authority. Some councils report social housing rents as income, though these are ring-fenced by law, into a housing revenue account, and can only be used for maintaining the social housing stock. Similarly, many councils treat traffic fines, and parking charges, as if they were general income, despite them being dedicated by law to funding parking services and road maintenance. Councils also receive grants to fund housing benefit payments, but a number portray this, in their council tax marketing, as if it was part of their general income. The remaining income, which is often almost entirely derived from business rates, and council tax, typically on a close to 50-50 basis, funds all other local government functions, the police, fire service, recycling, refuse collection/removal, council leisure centres, park and ride schemes, maintenance of parks and open spaces, street cleaning, subsidising of public transport, tourism, museums, environmental health and food safety, planning services, support for voluntary groups, Meals on Wheels, facilities for young people, social care, adapting homes for disabled people, play centres for children, CCTV installation, sports facilities, issuing taxi licenses, flood defences, and many others. The provision of a significant proportion of these services is stipulated by central government via statute. Local councils are obliged by law to provide these services. The remainder, however, are fairly discretionary, and are determined by the local council's whims. Since 2013, a portion of business rates has been retained locally, the remainder continues to be pooled centrally and redistributed. However, the amount redistributed to each council, and retained locally, is now relatively fixed, and is initially based on the historic redistribution levels. Consequently, if a council fails to manage the local business environment well, council tax will need to rise to make up a shortfall in council income. Conversely, if they are successful managers of the local economy, providing the same expenditure on services can be achieved with lower council tax. Calculation: each dwelling is allocated to one of 8 bands coded by letters A to H on the basis of its assumed capital value. Newly constructed properties are also assigned a nominal 1991 value. Each local authority sets a tax rate expressed as the annual levy on a Band D property inhabited by 2 liable adults. This decision automatically sets the amount levied on all types of households and dwellings. The nominal Band D property total is calculated by adding together the number of properties in each band and multiplying by the band ratio. So 100 Band D properties will count as 100 nominal Band D properties, whereas 100 Band C properties will count as 89 nominal Band D properties. Each collecting authority then adds together the Band D amounts for their area to reach a total Band D council tax bill. To calculate the council tax for a particular property, a ratio is then applied. A Band D property will pay the full amount, whereas a Band H property will pay twice that. Note there is no upper limit for Band H. This means that in reality, someone who lives in a multi-million mansion will only pay 3 times more than someone in a bedsit which falls into Band A. Revaluation: the government had planned to revalue all properties in England in 2007, but, in September 2005, it was announced that the revaluation in England would be postponed until after the next election. At the same time, the terms of reference of the Lyon inquiry were extended and the report date pushed out to December 2006. In Wales, tax bills based on the property revaluations done using 2003 prices were issued in 2005. Because of the surge in house prices over the late 1990s and early 2000s, more than a third of properties in Wales found themselves in a band higher than under the 1991 valuation. Some properties were moved up 3 or even 4 bands with consequent large increases in the amount of council tax demanded. Some properties were moved into new Band I at the top of the price range. Only 8% of properties were moved down in bands. However, a large shift of properties between bands will cause a shift in the allocation of the charge between bands, and the tax levied for each particular band will then drop, as the total amount collected will remain the same for each authority. Between the wholesale revaluations, a major change to a property can trigger a revaluation to a new estimate of the value the property would have reached if sold in 1991. If such a change would result in an increase in value, then rebanding will only take effect when the property is sold or otherwise transferred. Current bands: in England, the council tax bands are as follows. In Wales, the bands were reset on April 1, 2005 by the National Assembly for Wales, based on 2003 valuations. In addition to revising the band boundaries upwards, an extra band was added. In Scotland, the current bands are rates. Geographic variation: due to the different makeup of each council area, council tax rates can vary quite a bit between different local authorities. Though this isn't so noticeable in parts of the country like Scotland, where Band D rates in 2011 varied from a low of £1,024 to a high of £1,230, the effect can be more pronounced in parts of England. For example, the 2008 rates in London had this sort of distribution, variation over time. Under the Labour government of Tony Blair, average council tax rates rose dramatically above inflation, creating a degree of resentment by residents. The subsequent coalition government have made an effort to get councils to freeze council tax rates, gradually eroding the above-inflation increases via an ordinary inflation. This has been achieved by offering councils large grants in return for freezing their council tax rate. For example, in some years these grants were equal to the amount that would have been gained by a 1% council tax rise. In addition, the law has been changed, so that councils cannot increase council tax by an amount higher than a cap specified by the government, without holding a local referendum to approve the change. No council has invoked such a referendum, but many have raised council tax as close to the cap as they can get without passing it, for example, by 1.99%. Although elements of local government policy is a devolved matter, the Barnett formula leads the Scottish Government to acquire funding somewhat in accordance with central government priorities. Subsequently, by 2013, the Scottish Government froze council tax rates for the fourth time. Reductions, exemptions. Some dwellings are automatically exempt from paying council tax. These are officially organised into a number of distinct classes. Most of these exemption classes only apply when the property is completely unoccupied. These are as follows: the remaining exemption classes apply not only when the property is unoccupied, but also when certain categories of people are living there, a dwelling occupied by a minister, of any religion. Other classes existed historically. Local authorities now have the discretion to apply their own level of discount to dwellings in these former categories. However, many choose not to, and once a property has been vacant for over 2 years, they have the right to levy a surcharge of up to an additional 50% on the standard council tax rate for the property. Statutory discounts, low occupancy, a fixed discount, currently set at 25%, is available when there are fewer than 2 residents. This is known as the single-person discount. Though it is often concluded that the full council tax charge must therefore be based on 2 or more adults being resident at a property, this is not strictly true. Some people are automatically disregarded when counting the number of residents for this purpose, such as full-time students. The legislation also provides that, to count as a resident of a property, an individual should have the property as their sole or main residence. Case law has established that no single test may be used to determine whether this condition is met. As part of the National Fraud Initiative, every other year, the Audit Commission analyses metadata deriving from council tax accounts together with the full electoral register to produce lists of people it believes should be subjected to an investigation on the basis that there is a risk that a discount is being received when an adult who does not fall to be disregarded is actually resident in the dwelling. Disabled occupancy. If a property has been adapted to meet the needs of a disabled occupant, then, after applying in writing, and provided the adaptations are of a certain extent, the property will be rebanded to the band immediately below the property's normal council tax band. In effect, the dwelling is treated as if its market value has been lowered by the adaptations. Residents of properties in the lowest council tax band can receive this reduction. They will be placed into a Band Z, discretionary reductions. Under the Welfare Reform Act 2012, local councils were given powers to create new deduction rules for their council tax. These rules are now officially known as council tax reduction schemes, though many councils market them to residents as council tax support. The choice to market the rules as a benefit, rather than a tax cut, may be an ideological one. These powers are restricted by the Act. The rules cannot be arbitrary, ad hoc, or targeted at specific individuals. Since these powers replace the former statutory rebate schemes, the government has also restricted the councils from increasing, by more than a certain amount, the net council tax bill for any individual who previously received a rebate. In particular, people in receipt of the guarantee credit element of pension credit must continue to receive a 100% discount. These powers took effect in April 2013. The consequent reduction rules vary from one local authority to another, with some councils keeping the same rules as the rebate schemes they replace, while others took the opportunity to inflict a small level of tax on people with low incomes. Former statutory rebates. Historically, a number of statutory council tax rebates existed. These were applied to the council tax bill in advance of the bill being delivered to the claimant, effectively creating a discount. However, this was not merely an overly bureaucratic discount. The rebate money was provided by central government, but the council tax bill it rebated was paid to the local authority. Though the funding was provided by central government, the schemes were administered by the local authority responsible for producing the relevant council tax bill. Originally using paper application forms, local authorities began to use a telephone-based application process in the last few years of the rebate schemes. Under these latter application schemes, claimants would often contact the responsible central government department, who would then forward the details to the local authority. Since 2013, explicit council tax discounts have been provided instead. The local authorities have been given the right to choose their own rules for the discounts, within certain bounds, but many local authorities choose to use similar or identical rules to the former statutory rebate schemes. Second adult rebate: many individuals share their dwelling with members of separate households, who would ordinarily be expected to pay a share of the council tax bill. However, in some cases, it would not be reasonable to expect those other residents to be able to pay a full share. To assist individuals sharing with those residents, a rebate was available, as follows: 25%, if each of the second adults are in receipt of one of, income-based job seekers allowance, or, income support, or, income-related employment and support allowance, or, pension credit. Otherwise, it is based on the combined gross weekly income of all the second adults, 15%, if under A £175, 7.5%, if between A £175 and A £227.99, nothing, if A £228 or above. Council tax benefit. Council tax benefit was a means-tested rebate that potentially rebated 100% of a claimant's council tax bill. The rebate would be reduced by a fifth of any qualifying income above a certain level. Benefits did not qualify for this calculation, but most other income did. In effect, council tax benefit was a rebate for people with low incomes. The claimant could not be awarded both council tax benefit and second adult rebate. Only the higher of the two, in relation to the claimant's circumstances, would be awarded. Non-dependent deductions. A non-dependent is a person that the claimant is sharing accommodation with but is not a member of their own household, such as lodgers or joint tenants. Since it would be reasonable to expect non-dependents to contribute towards the council tax bill, council tax benefit was reduced so that it only covered the claimant's hypothetical portion of the council tax bill. However, no reduction was imposed if the claimant or their partner needed substantial care. This qualification was met if, and only if, the claimant was registered blind, or, in receipt of, the care component of disability living allowance, or, severe disablement allowance, or, exceptionally severe disablement allowance. No contribution was expected from non-dependent who would themselves qualify for council tax benefit, were not counted towards the number of residents liable for council tax, were normally resident elsewhere, or were not adults. But the remaining non-dependents were each hypothetically expected to contribute the following amounts: A £2.30 if in part-time work, otherwise, A £2.30 if weekly income is under A £178, A £4.60 if weekly income is between A £178 and A £305.99, A £5.80 if weekly income is between A £306 and A £381.99, A £6.95 if weekly income is over A £382. Council tax benefit was therefore reduced by an amount equal to these hypothetically expected contributions. Housing benefit. In Northern Ireland, where the old rate system is still in place instead of council tax, a rebate scheme existed for rates, that was similar in design to council tax benefit. Confusingly, this was named housing benefit, despite another housing benefit also existing there to assist with rent payments. Administration of housing benefit for rates was split between two organizations depending on whether the claimant was renting or was an owner-occupier. Tenants could claim both kinds of housing benefit, while owner-occupiers could only get housing benefit for rates. Tenants had to apply to the Northern Ireland Housing Executive regardless of whether they rented from a private landlord, from the NIHE itself, or from a housing association. Owner-occupiers had to apply to the Land and Property Services Agency. Criticism of the principle, council tax is criticized for perceived unfairness in not taking into account the ability to pay. These critics point out that while the capital value of the property in which a person lives might give some indication of the relative wealth of the individual, it does not necessarily relate to current income. Council tax advocates respond that those on low incomes can apply for council tax benefits which can significantly reduce the amount the applicant pays. This argument presumes, of course, that the system of council tax benefit is itself a satisfactory scheme. In particular, not everyone who is eligible to benefit will make a claim. Critics also claim that council tax has a disproportionate impact on renters, or those occupying part-owned social housing. They are paying tax according to the value of a property that they may not have been able to afford to buy or even rent at market rate. Equally, the tax isn't actually particularly proportionate even to property values. A Band H property will pay at most 3 times as a Band A, even though the value of the property may be 10 or more times higher. While many argue the tax may have regressive characteristics, supporters point out that there is a significant means-tested benefit regime in place which offers rebates to those on low incomes. This has the effect of making the tax less regressive. Furthermore, in comparison to its predecessor, the community charge, council tax is straightforward to collect with in-year collection rates averaging 97% in England. Alternatives. A wide range of alternatives to council tax have been suggested, from a charge based on service use by each individual, to a flat per capita rate, to a local income tax. Administering a system of local income tax independently of the national tax system would impose significant costs for government and business, significantly eroding the value gained from it as a source of local government income. Conversely, administering a local income tax as part of the national tax system would leave local taxation entirely under the control of central government, and there is little reason not to centralize it entirely. This leads to the obvious alternative of allocate all funding directly from central government finances. Already around 75% of local authority income is ostensibly provided via central government. The biggest argument against this is that it removes fiscal independence from local government, making them mere service providers. However, since local government in the UK has no constitutional guarantee, and is shaped entirely by the whim of central government, some critics argue that local authorities can never be independent of central government. Part of the reason for criticism of council tax is the sheer size of council tax bills. Though the coalition government have frozen council tax levels in many local authorities, they remain quite sizable, and any unfairness is more noticeable than it would be if council tax bills were only a few pounds each month. This leads to another alternative, transferring control of the more expensive services directly to central government, and leaving local authorities only needing small amounts of money for their remaining functions. Of historic bills, in Scotland, criticism has been levied not so much at the principle of the tax, but at its debt collection arrangements. Community charge and council tax debts can be pursued up to 20 years later. Few people will have conserved their payment receipts for such a long time and as such are unable to prove that they paid. John Wilson MSP presented an enforcement of local tax arrears bill on March 19, 2010 in order to try to reduce this collection time from 20 to 5 years. In England and Wales, council tax debt in line with other debts already expires after 6 years. An edition of the Current Affairs programme Tonight with Trevor McDonald on January 26, 2007 investigated whether millions of homes had been placed in the wrong band in the original 1991 valuation. It was shown that the banding valuations were often done by second-gear valuations. In other words, valuations were often done by driving past homes and allocating bands via a cursory external valuation. The program followed case studies of a system devised by the presenter Martin Lewis, published on his website in October 2006, who had received thousands back in back payments after appealing their band allocations. This council tax cashback system was said to have the potential to reach millions and received widespread publicity, likely to encourage people to challenge the system. There had been no information published on how many have been successful in obtaining a reduced banding until the 22nd November 2008 when the Daily Telegraph, in a news article about the campaign by Martin Lewis, stated that in the past year 97,563 properties in England and Wales have been rebanded, with 69,695 of those downgraded. See also, local income tax, window tax, notes and references. External links, Check your council tax band, from DirectGov. Check your council tax band, from the Scottish Assessors Association. Pay your council tax online, from DirectGov. Council tax arrears resolution and advice, from Council Tax Advisors. Council tax payments, discounts and appeals, from DirectGov. Is it fair? The UK Council Tax Protest Group, Axe the Tax, Liberal Democrat Anti-Council Tax website, ministerial correspondence relating to council tax in the financial year 1991 February Treasury disclosure under the Freedom of Information Act, check if you're in the right council tax band, full listing of rates for each council and banding information. Office of Deputy Prime Minister released council tax figures.